Hey guys, what's going on? Alrighty, I wanted to look at the Dow and how it did this week. Not so good. Went down 1,000 points. Now, what was interesting is that the currencies acted in a different manner than they did in the previous week. So that told me that, hey, risk is coming off, and look, the Dow is going down as well. So it looks like everything is intertwined. If you look at the dollar yen, right? The yen appreciated against the dollar. The carry trade was unwinding this past week. Secondly, you could see that the Euro USD, that rallied. It rallied from 1.10 from the previous week all the way to 1.14, close to that range, at the end of Friday. So yeah, that was like 300, 350 pips up to the upside in the Euro USD. And what was quite interesting is that gold also went up $80 the past few weeks. So interesting to note. Dollar goes down, gold is going up. And I did mention in the previous video last week that, hey, you know what? Every time the euro is going to 1.12 and 1.11, I'm taking a short position. This week I didn't take a short position. I didn't feel comfortable doing that. But who knows? I may get back into shorting the euro. Just depends on what's playing out. I mean, ultimately, I still feel that the euro is going to go to parity with the US dollar. Still feel that there are a lot of problems happening in Europe. But short-term markets, what do I see that is not being covered by the news right now? And that is the spot VIX is at 28, right? I did say that this would be the year of volatility. And yeah, there is more volatility, I feel, than there has been in the past few years. But at the end of the day, if volatility has jumped from the low teens all the way to the high 20s within a span of a few weeks, I feel that there's going to be a dead cat bounce, right? Now, that doesn't mean that there's going to be a dead cat bounce. So if you're trading, just don't assume that we will see a dead cat bounce. But you have to remember that there are a lot of central banks, and there tend to be squeezes, short squeezes, when there's a central banker saying that, hey, we may have more QE. Like, what if Bank of Japan says this? Or what if Draghi says a comment? Oh, yeah, if there's more deflation out there, we're going to have more QE. Well, he has said that. He has said that they would tweak QE if the rest of the world slows down. So, or even if the Fed comes out and says, you know what, we're going to raise rates in December, even though a lot of people are assuming, hey, they're pushing or kicking the can down the road to that date. So remember, spot VIX 28. So aggressively shorting the market at this point, I think I would wait to short the market. I would wait for a squeeze, and then depending on the technicals and levels that it gets to, maybe close to 17,000 again, maybe a little higher. But the reason that I'm bearish, even though I have some long positions right now, but maybe like October or something like that, until that moment, I ultimately see the market going lower. I could be wrong. But at the end of the day, we are in the 6th year of the bull market. Also, you have to remember that, hey, it's the 7-year cycle. We're in that. So things start to get weird at that moment. And then you look at Martin Armstrong's economic confidence model. You look at the dates. There's a turning point in October of this year. You have to remember his cycle looks at pi. It's a really interesting take. So just thinking, okay, you have those two cycles turning, and then in addition to that, it's October. October usually is a volatile month. So that's why I say, yeah, I'm going to be bearish until October, even though I still see a short squeeze. I am long some positions, short some positions as well. I'm all over the place, by the way. Have some gold as well in some positions. Have cash. So I'm not it's strictly going one way. I mean, all sorts of ways. But anyways, just remember, if you're trading, spot VIX 28, see some selling in the volatility, meaning that I see the market having a dead cat bounce. But I don't see anything positive maybe for the next few months. And then I want to aggressively buy probably after October or maybe October. I still feel that when the money comes out of the bond markets, right, that's where you see safety, all this safety money going to right now, the bond markets. You see bonds appreciating. Where will that money go? And I think it's going to go into equities, and it's also going to go into cash. But we shall see. I always have a long-term outlook anyways, so if I am wrong, if the market does go below 10,000, I don't think it will, the Dow, then you know what? 30 years from now, if I wake up, I still feel it's going to be much higher than where it is right now. So keep that in mind. So if Harry Dent is right for whatever reason, right, long-term markets tend to go higher because of how the Dow is manipulated. Right? They continuously change the composition of the Dow. Anyways, guys, share your thoughts. What do you think is going to happen with this next week of trading and also next few months? Where do you see the market going? Anyways, thanks for listening. Talk to you later.